Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Wednesday, February 18th, and this is your New York Open Prep. Here are the key themes shaping the day. Oil is jumping on renewed geopolitical risk. The U.S. economy looks a touch firmer on fresh factory and orders data. And sterling softens as UK inflation cools and rate cut bets build. Energy is front and center. Crude is nearly 3% higher after Russia-Ukraine talks in Geneva broke down quickly, reviving worries that sanctions and supply constraints will linger. Add to that fresh tension in the Middle East, with US-Iran rhetoric putting possible strikes on the table. And in the background, Nigeria's ongoing struggle to meet its OPEC+ quota underscores how fragile supply can be when producers underdeliver. For traders, that matters. Stateside, the macro tone is steadier. January industrial production beat expectations, with manufacturing output firmer than forecast. And December durable goods orders were not as weak as feared, with core business investment holding up. Housing starts for December also topped estimates, hinting at some resilience, even as affordability remains a drag in parts of the country. The Federal Reserve minutes are due later today, and the dollar is holding gains ahead of that release. Across the Atlantic, UK inflation eased to 3% in January, lifting the odds of a Bank of England rate cut as soon as March. That dovetails with a research call pointing to policy convergence with the euro area, supportive of the euro against the pound. Separately, a push inside Europe toward deeper capital markets integration, and even talk in Sweden about euro membership, is seen as structurally positive for the single currency. On the global trade side, dismal China export flows are showing up in weaker container volumes at the Port of Los Angeles during what is usually a busy season. In Japan, political stability signals and a focus on achieving durable 2% inflation come alongside a softer yen as the broader dollar bid returns. Gold is steady, with gains capped by a firm greenback and calmer tone in parts of geopolitics. Turning to markets and sectors, higher crude supports energy shares and nudges inflation expectations, while weighing on big oil importers. A firmer dollar into the Fed minutes leans against precious metals and keeps pressure on higher beta currencies. Softer Canadian inflation lowers the bar for policy response, a mild headwind for the loonie, even as oil prices offer some cushion. Looking ahead, the main event is the Fed minutes later today. Beyond that, the calendar is relatively quiet, so headlines around energy and geopolitics may set the tone. What to watch today? Brent and WTI look for an uptrend to persist if supply risk headlines stick. The dollar versus the yen, an uptrend if U.S. strength and Fed caution keep yields supported. The euro against the pound, a gentle uptrend on rate convergence and cooler UK inflation. The U.S. dollar versus the Canadian dollar, a bias higher given softer Canada inflation, though oil strength could temper the move. And the Aussie against the U.S. dollar, a downside bias if China trade softness lingers and the dollar stays bid. In short, energy risk is back on the radar, while U.S. growth looks steady and central banks stay patient. Markets are constructive, but headline sensitive.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.